l'expert financier et le banquier. Au fait, ce sont les mêmes gens. Hein.
Hi, and welcome to another episode of Marula Bites. I'm Dr. Polan Kantwe, and today's episode is a hot one because it is making waves all around social media. And it's important for tech enthusiasts that are following this channel to tag along. Last weekend, we had a conference from the YouTube channel, which has over 1 million subscribers, that essentially directed by Philippe Simo, Investir Au Pays, which essentially means in French, invest in your own country. On the discussion panels with three individuals from three different countries and industries, Mr. Chipama from Democratic Republic of Congo, RDC, Mr. Zeze, which is from Senegal, who is a finance expert, well known throughout the finance world, and Mr. Chofo, who is from Cameroon, who is an industrialist, also well known specifically on the channel Investir Au Pays, which essentially brought a different viewpoint on the issues of finance in business. The key issues of finance in business is important for tech for the main reason that tech cannot exist without investment. It cannot exist without capital expenditure, and it cannot exist without leveraging of debt. And the key question is, how does that work within the landscape of Africa? So follow along with me and let's listen.
Avec le banquier, on emprunte pour investir, mais on emprunte non seulement quand on en a besoin, et on n'emprunte pas pour emprunter, parce que si vous empruntez à 15% et que le business dans lequel vous allez investir va vous rapporter 10%, ça n'a pas de sens d'emprunter. Ça veut dire trouver un autre business qui va vous procurer 30%. En réalité, quand je dis qu'on emprunte quand on est obligé d'emprunter, c'est-à-dire qu'on emprunte quand c'est nécessaire, mais il faut savoir emprunter. C'est ça le plus important.
This extract, Mr. Zeze clearly points out a few things. And it's a lot to do with we have to have a mindset. We have to have a mindset towards debt when it comes to business and in tech in general. And what he's basically saying, which I'll try to paraphrase, he's saying that there is no point in you procuring debt if you don't have to. There's no point in you procuring debt at high interest rate if you don't have to. And more importantly, there is no point in procuring debt at a specific interest rate if your return on investment will be lower than that interest rate. And that is fundamental to understanding the education of debt, the mindset regarding money, and more importantly, the strategy when it comes to your business and cash flow. Now, Mr. Chofo dived into a different aspect when it comes to business, and that is managing risk. Let's listen to this next extract that gives us some context.
Juste avant de démarrer, j'ai compris que je ne pouvais pas démarrer sans la banque parce que je n'avais pas de matières premières, je n'avais pas fait de finition, je n'avais pas de groupe électrogène. Et j'ai plus dépensé, pourquoi? Parce que je naviguais à vue. N'ayant pas pris un crédit, personne. Si un banquier vous dit que votre projet est bancable, ça vous rassure à 50% que vous êtes sur la bonne voie. Parce qu'ils ne font rien pour rien. Ce sont les gens qui prennent tout, même ce qui ne les appartient pas. S'ils ont la possibilité de prendre, ils prennent.
Mr. Chofo, of course, amicably gives reference to some very important aspect when it comes to managing risk in business. But what he's saying that for you to accelerate and for you to expand and for you to ensure that risk is indeed managed on a broad basis, you need bankers. You need a bank that will ensure that not only is your business assessed by an external party. Why? Because oftentimes we have tunnel vision when it comes to our own business. We have emotional bias when it comes to our own business. And a bank not only is able to secure distributed risk amongst you, your business, and the bank, but is also able to give a cold assessment on whether your return on investment for your business is actually possible. Now it came the turn of Mr. Chipama, who is a very well-known banker in the Republic of Congo and RDC, essentially in French. And he gave a perspective of why banks are important. Now, this is quite important from a context of an African or developing or underdeveloped country. The notion of a bank is often seen as a negative one. And he's essentially saying For you to understand business, you need to understand how to use a bank. Let's listen to this next extract.
Pas d'accord. À quoi ça sert un banquier? Un banquier, premièrement, c'est ton conseiller. Il est ton conseiller. Écoute, Bertin, voici, il faut faire ceci. Voici, il faut faire ça. Et toi, tu écoutes attentivement. Pourquoi? Parce que le banquier, il est au milieu du village. Il a une vision 360 degrés de l'activité économique du pays. Même le gouvernement le consulte en disant, monsieur le banquier, que pensez-vous? Est-ce que telle politique est bonne ou pas? Monsieur l'entrepreneur, c'est pour ça que la banque est étroitement surveillée. Parce que les banquiers, c'est votre conseiller. Alors, si je peux te donner un conseil, apprends. Je ne te demande pas d'aimer le banquier, mais à le fréquenter, à le côtoyer, à faire de lui un ami.
Very amicably, Mr. Chipama again restates what I've just said, which is you cannot do real business without a banker. You cannot do business without someone who has what you don't have, which is an understanding of the business landscape, the economics of the country, of course, from a reputable bank, right? So we're not talking about any just bank that you come across, but a reputable bank that has clearly shown the ability to be credit worthy, but also be well regulated within the financial system of that country. And he's essentially saying there is no point in trying to do business by yourself because essentially the banker has some good advice for you, which is the advice of how to ensure that your business, given the distribution of risk between you and the bank, will be sustainable and will be profitable. Of course, to some of the profits going to the bank. And Mr. Chofo again took word and essentially exposed the realities of having an industrial business in Africa. Now, whether your business requires capital expenditure, whether from transportation, whether for sanitation, whether for manufacturing, or whether for farming, there is a need to understand the industrial process of your business. And unfortunately, there is no other way of ensuring that your business, from an industrial effectiveness perspective, has really good cash flow, but also the technology that you are leveraging is well financed. Let's listen to this next extract on his opinion regarding business in Africa.
Banquier ne vous prête pas de l'argent pour que vous partez faire les bénéfices. Comprenez ça clairement. Ce qu'il dit que je l'écoute comme conseil, oui, on les appelle les conseils à la banque, mais il faut beaucoup faire attention. C'est pour ça que l'expert financier ne prête pas de l'argent, parce qu'ils se connaissent. Ils se connaissent les deux. Parce que lui, il prend plus qu'il en fallait, il vous dit des choses, au fond ce n'est pas ça, mais la réalité c'est que quand tu veux faire les affaires, il y a les ennemis condamnés à marcher ensemble. C'est le banquier, c'est l'assureur, c'est les impôts. Si tu ne peux pas être d'accord avec eux, mais tu dois faire avec eux. Je ne vois pas un industriel qui peut fonctionner sans les impôts, sans la banque et sans les assureurs. C'est impossible.
So he's essentially saying there is specific things that a business should always factor in when it comes to your net yield, which is essentially your yield after all the specific costs that have been taken into consideration. Does this business actually make sense? And what are some of the costs that he's talking about that oftentimes a lot of African business, whether on YouTube or wherever you read it, don't usually factor those things in. Number one is regarding bank fees and potential interest rates when it comes to your loan. Number two, when it comes to business cost, is insurance. In Africa, there's a lot of risk when it comes to the industrial process that requires a supply and demand. An insurance company ensures that at least there's some level of cover that potentially will cover against all sorts of different things, including theft. And number three, which is probably even more important, is an understanding of the tax system in the country that you're operating or in the country that you're selling. Africa is multi complex when it comes to tax in different countries. Your ability to understand and have a good accountant that has a good understanding of tax is a plus when it comes to an industrial process being profitable. That is the crux, i.e., borrowing is just the start. Knowing all these hidden costs is what will make sure that your business is indeed successful. And finally, Mr. Chofo, maybe I'm a bit biased, given je suis Camerounais après tout, is the sad realities when it comes to doing business and financing your business in Africa vis-a-vis strangers or diplomats requiring that same type of finance. And this, in my view, is the sad thing that even though it was within a context of, kind of joking around and really seeing the entertainment with this discussion, this is the crux that should be rectified when it comes to our finance and businesses in Africa actually succeeding and making a difference, including in the world of tech in in Africa. Let's take a listen to what Mr. Chofo has to say.
Monsieur Chipama vous dit, si vous déposez 120% de garantie, vous donne de l'argent. Il se fout de la gueule du monde. Allez voir les expatriés. On est sur le marché en Afrique ensemble. L'expatrié vient avec son passeport. Son passeport. Il vient, on te dit, il a la couverture diplomatique. Il a ceci, il a cela. Il vient, on part dans nos épargnes. On lui donne 100 milliards sans aucune garantie. Vous pouvez voir au Mali, au Cameroun et en Côte d'Ivoire. On les donne ça sans aucune garantie. Mais quand nous, les nationaux, on arrive, ils demandent, il faut les garanties. Tu apportes, il en faut. Tu viens même avec le terrain où il y a la tombe de ton père, il prend. Il prend ça comme garantie.
And even though it's such a joke and it's funny, and to be fair, it's very entertaining, there is an underlying sadness regarding how the financial systems that are locally structured and locally organized have such a different mentality when it comes to perceived risk for its citizens. And that is the unfortunate truth, is that it is much harder for a local citizen in most African countries to borrow money at a favorable interest rate than it is for a foreigner who essentially is there on a temporary visa to get that same interest rate, if not better. Now, that is the crux, because the cost of manufacture, the cost of doing business, essentially extrapolates over years, and your efficiency over the years and decades on whether you will remain competitive or whether you will close down. For me, that is the dangers of tech in Africa, the dangers of doing any types of business, including tech. And I would like to hear what you think about this conversation. There are so many pertinent points that I think has some value in us discussing, in us deliberating, in figuring out what does that mean. But essentially, I've got three specific things that I would like to share. Regarding this discussion, there's three things that I've learned. One, you need to educate yourself. You need to understand what it means to have debt, what it means to use your cash. And second, you need to understand the timing of those two, when to use it, and when to use cash and when to use debt. And number three is leverage. Your ability to understand that debt can be leveraged and so can cash be leveraged will make the difference between your business in tech or otherwise being a success.